Hello friends, this is Rajat and welcome to our next live market update. And today we'll be diving into some of the very fascinating movements that happened into the market today. We saw the markets going up in the morning and then nearly settling up at a flat. However, the mid caps saw the swing. So today we will be looking into which sectors were impacted, which stocks were impacted, what we are going to expect in this week globally as well as based out of India, and how the market should respond to it so that the investor is able to take a very good call based on the information available. Not only that, we will be also talking about different sectorial performances that have happened, and you will come to know that the Nifty 50 benchmark has actually been defeated hands down. Which were the sectors there? We will be looking into it also, and also we'll be looking into electronics and telecommunications updates about the same. And also at the end we'll be talking about one of the stocks that received 100 crore of the payment from their one of the leading you can say UPI payment gateway providers. So first let's see how the market performed and how it actually impacted the investors money today. So therefore, the Sensex and the Nifty ended relatively flat amid volatility. The main gains, if we would see, would be the oil and the gas metal sectors, while the Sensex itself dipped by around 12.16 points, closing at 80,424.68 for that matter. Among the top gainers, if we say, there had been a Hindalco Industries, BPCL, Shriram Finance, Tata State, L&T, Mindtree, M&M, Bajaj Auto, and among many others. However, sector-wise, except for auto and bank, all other indices had performed well. And maybe the banking would have been impacted because of the RBI, which was going to hold sessions with banks with regard to their liquidity ratio. So therefore, that might be the reason why the banks were under the impact. However, if we see the BSE mid cap, it rose by 0.5%, and the small cap actually added solid 1% performance. So we have seen that while the broader you can say the blue chip sector, the top 20 or top 30 stocks indices had not performed that well. However, the mid cap and the small caps actually saw the returns coming up. So therefore, if we want to see how it transpired into the building, let me show you here. Yeah. So here, if you would be seeing, we are looking at, you can see here. Okay, here we are looking at, on the right, Tata Steel 2.97. Here we are looking at Hindalco 3.8, which we had mentioned. And if you see among these, what we say that herein we see Shriram Finance. So among the financials, we had Shriram Finance, which had been exceptional. However, all the other financials had not been that good. If you say about oil and gas, we have seen BPCL about 3.14, Coal India 1.89, and ONGC around 1.73. If we come a bit down, we have seen here TCS strengthening. But however, while it had been up by around 1.67, many other IT firms had not been doing it. If you see the recent report that had come up, uh, larger IT companies were not able to perform well. Their stocks were not able to perform well. Their margins on their profits had been lesser as compared to the smaller IT companies like Cognizant or LTI Mindtree for that matter. So therefore, even if you are willing to venture into an IT stock, then you also have to be very vigilant about the fact that whether it has to be big IT company you want to enter into or small IT company you want to enter into, because the profit margins on the quarter on quarter basis had been better in terms of the smaller companies rather than the big companies. And if we see here in the healthcare and technology, we are seeing Dr. Reddy's in a better, and here if we see L&T, LTIM among commercials, which has performed actually better. But once we come to Nifty next 50, Nifty next 50, here we see what's the difference. Adani Green has shot up by around 3.66%. The Gale has gone up by 2.71%. The trend is actually on the way high, around 2.8%. It had already shown a profit of around 45% in its quarterly returns that had come up. And since then, it has just been trending higher and higher. And if we see process industries, Berger Paint has been an exceptional with Vedanta 3.11 in non energy minerals for that matter. So if we, even if on the broader scale, if you see this heat map, and if you see the Nifty 50 heat map, you will still see more gray and red areas as compared to, you can say, Nifty next 50 for that matter. So if we say that the broader participation had been in Nifty next 50 and the mid cap space across number of stocks in order to have the in their performance, how it transpired. So this was one element of it. The second element of it that comes, that we also have to see what we are going to expect this week, which is going to impact us as an investor. So looking ahead, coming this week is packed with economic data that would sway global markets. We expect updates on PMIs from major economies, whether that is India, US, and Europe. Not only that, we are also going to see the Jackson Hole Economic Policy Symposium, which is keenly awaited speech from the US Federal Reserve. And why is it important? It is actually important because they will keep an eye on how the interest rates have to be changed. So everyone is actually going to see how Jerome Powell will be addressing the media in terms of their rate cuts, which is expected to be in September. However, we don't expect it to be a 0.5 or even more than that, because as per Jeffries, if we go, they are expecting it to go gradual and the slow. Maybe by December it could be 0.5 or 0.6, but we can only expect 0.25 happening in September, even if that happens. However, there should not be any knee-jerk reactions that should come, or you can say any bad news that should come from the PMI data or the jobless claims data in the US, because that will prove a roadblock in terms of their assessment. Not only this, from Indian also PMI data is going to come. Apart from this, from India, we are also going to see the IPOs like Interact Building Products and the Orient Technologies that will be coming up. In the primary markets, we are going to see the listing of Saraswati Sari Depot anticipated following the strong IPO response that has happened. Additionally, important data such as US jobs claim and Japan inflation, we are also going to see in the coming segments. Now, while we have looked into this, now one more important thing that has come up is our segment 3 that focuses on the India's market dynamics. Now you will be very surprised, and you should be very happy to know that India's the market capitalization now stands at around 124% of the GDP, which actually was around 97% of the GDP in 2019. So from there, we are not 124% of the GDP, positioning India as the fifth largest market globally. Industrial sector is witnessing a realignment. Like many times we invest into Nifty or indices, we always see where the returns are going to be made, which sectors are which are actually going to be making returns. So in this section, we'll be covering about what the performance had been, how it has been in respect to the broader indices like the Nifty 50, and from there we will take the cues. So industrial sector, if we are witnessing as a realignment, there's a significant gains in chemicals, pharmaceuticals, and the steels, while the traditional sectors like textiles and food products had been lagged behind. This primarily also be due to the various PLI schemes that have also been done. Now, because the prior sector like steel and all those things have actually performed better, this shift has also influenced the export-import balance, with steels, pharma, automobiles emerging as the major net exporters, and whereas the sectors like coal, capital goods, and chemicals remain heavily reliant on the imports as we see it. The government's production linked incentive schemes has been a game changer, attracting the investment of around 1.3 lakh crore. So that investment has come up, that has actually resulted in boosting of production and the sales of around 10.8 lakh crore that is happening, expanding exports by 4 lakh crore. Now, because of that investment that has happened into through the PLI schemes, there has been an exports expansion of 4 lakh crore and generating over 8.5 lakhs of job. So this was from the industrials. If we look from the infrastructure point of view, the development is booming thanks to the public initiatives like the PM Gati Shakti. Over 1 lakh crore has been raised through the capital market this year alone for the infrastructure projects as we see it. And if we see services sector, we are going to see the robust recovery happening like in business services or the trades, with 40% of the sector's gross added value. Now, the business services, if we see service indices as say, the business services actually account 28%, which is followed by the trading. Now, this, if you would like to see, then you will be shocked to know here. Now, all these three sectors that I have talked about, whether that is industrials or infrastructure or services. Now, if you compare all these three verticals with Nifty 50 or the Sensex, how they have performed, you will be surprised to know that if we see 2022, 1st of April 2022, till now, the industrials itself have grown by around 186%, whooping 186%, with infrastructure up by around 147%. So therefore, if you had taken a thematic funds, then you would have actually seen the returns happening in the portfolio, which obviously would not have been averaged out or decimated by having a diversified portfolio or a broader portfolio or a generic portfolio for that matter. So Nifty 50, where it has given around 39 to 40% returns, industrials and infrastructure have given over 150% return around. Services, or obviously because IT has not been performing well, the services have been below the Nifty 50, and you can simply see if you have a diversified mutual fund, why your returns are not being made as compared to the thematics is because of the services being the lackadaisical in the same. So therefore, now while these factors have been there, we also have to see that globally the focus is now on the Federal Reserve, where the rate cutting path is expected to be gradual and shallow, which is reflecting resilience in the macroeconomic landscape. We don't expect a very steep cut, as I have already told you. So 50% cut in September was expected, but not that much. The probability of that is actually low. So we can very well expect maybe around 32 bips point of the cuts happening. The pace of the cut, when the Jerome Powell will be addressing the Jackson summit, the main thing will be seeing the body language of the Jerome Powell, how is he addressing it, what he wants, what he, so it is not merely what he's speaking out, but what his body is actually also giving out the signal. So that will be a thorough analysis that all analysts around the world would be doing, as he would come up with his speech on Friday at around 10 a.m. Now, this would have both implication for the credit markets as well as the equity markets. And from there, we can also see the fund flow happening, and also the debt markets would be impacted. Now, while we have covered the major part of today, what has happened, the last segment that is mainly the attraction for the day is PhonePay has signed a 100 crore contract with CWD Limited for soundbox manufacturing. Now we know that whenever we go and pay somebody through UPI or a PhonePay or a Paytm, we know that there's a sound box that says कि okay, Paytm पे आपके 10 रुपए या 50 रुपए receive कर दिए गए हैं. So that sound box is being made by CWD Limited, and PhonePay has entered into a contract for 100 crore with a company which is called as CWD Limited. Now, due to this, the stock has actually hit the upper circuit, and if you see the screen, it has gone to around 953.8. Now their managing director has also said that we are going to improve our products more so that it adds more value to the end customer. Now having said that, as an investor, everybody would like to see okay, CWD, it has gone up, and if you see the dark red line over here, it is already if you see the dark red line here, it is at 200-day moving average. So normally a technical analyst will see that okay, it has already gone above the Fibonacci level of 0.5 and 0.618. So, and also above 200-day moving average, which also crossover happening into the EM and MA crossover. So therefore every investor will try to buy in or enter into it. Now the matter of the fact that this is the point where you need to be very cautious about whether this stock is worthwhile to be invested into or not, because if you see this flip or a jump that has happened is because of the news that it has got a contract. Now if we see two aspects to it, one is the technical and one is the fundamental aspect. Now this I am trying to give you a deep view into how an investor falls into a stock and what are the things that you should actually look into whether you want to go for a stock or not. I'm not recommending here anything, but what I am stating is how you should look at the news and try to analyze it. So if we see here, if you see here also the analysis had come for the quarterly results. Okay, now here it had come, if you see the stock on this day went up, it again here it went up and it gone at from here it actually went down, then it actually gone up, it actually went down. So if you see that it went high, but technically it is actually trending on a lower path. Now this type of information or swing hit has happened based on news. It has happened on the news. So this is about some project has been won. So but this brings us to the second conclusion. Okay, even if I as an investor would like to take this bet to get in onto the stock, so then should I go for it or not, and what other things I should look into? So this brings to the very crucial point that you should look into the financials of the company, fundamentals of the company, and we will look about the main broader number and also to understand the trend that goes. And if we are able to understand the trend, then we will have a broader perspective of the things. So if you see here CWD, we are seeing that here it is went up by around 5%. Okay, its annual results had been technically negative returns on this. So here what we have done, we have gone into the profitability and we are looking at the return on assets. Now return on assets primarily 4 or above is actually good. But here if you see that from 12 to 3, from say I will say 2021 to right now 2024, so technically the return of assets had been falling. So return on assets means that if a company has all the assets, how many times those assets are churned to make a return out of it. The higher, the better. So if you even want to bet your money on a stock, at least you should have a 4 return on assets being 4 or above, just on a broader scale. For different industries, it could be different. For different sectors, it could be different, and the comparables could be different. But a generic benchmark is like that. Similarly, if you look at the return on equity, it is showing 29 in 2022 and now is showing 4. In 2023 it was around 10.36. So this simply means that the return on equity is also falling. Now return on equity, if you want to go for any stock, should be approximately 15 and above. 25% is awesome. There are many companies which are also providing 35% of ROE. That is good. But if you are having no, even if it would have been an improving thing, then it would have been a good. But if it is not an improving one and it is already showing a falling trend, then it is actually a red flag. Similarly, return on common equity, 29% fall down to 4.49%. So obviously we are looking at this. So again, it is a red flag. Now, even if we look at now the net income, and if we see that the net income trend had been say 31 in 2022 and it has gone down to around 11, so it is again a red flag. So should I put a money into a company which is actually making a losses? And if we see further into it, you will also see the cash flow from operations itself had been decreasing. The debt has been raised. So company has been borrowing more money into the markets from the market. So company has been buying more money into the markets. And also is cash flow being generated from the operations. Cash flow from operations means if they are in a business of sound box, so how much cash they are generating by view of selling those sound box. So year on year basis, that cash coming in from operations is falling. So if that is the case, then obviously while this is a good news to be a headlines, brings focus onto the stocks, bring people on to the penny stocks, it's again a risk to be taken. And if you again consider its price to earning ratio, price to earning ratio, it's again too high, not to be considered even by a sane investor for that matter. Now so this is how, when you see that a news like a 100 crore contract has been given by PhonePay to this for UK transactions, you will tend to go for this stock without knowing what is going on the back end. So here we have shown you, even if the company is innovative, good and expanding, the fundamentally it is not that strong with cash that if something happens tomorrow, it should have that reserves with it to actually weather that thing and give you a return. And if a company has been actually consistently falling, so even if on a shorter term basis you have seen a swing up, then that doesn't mean there is a trend reversal. The trend reversal doesn't happen that way. This might be just a swing up and the broader trend might be still be falling down for like decreasing trend. So you also need to understand whether the trend is going up or falling down. Now with this, I would like to actually thank you for joining today's session, as we have covered the range of topics from the market performance to the crucial economic events, explore promising stock that you might be worth attention to like CWD, and I actually showed you how you can prevent yourself for falling, like burning your money on the stock. So don't forget to do your due diligence and consult your own financial advisor or an agent or a broker before making any investment decisions. We look forward to seeing you in our next sessions. Happy investing.